in the next 6 to 9 months, right? Whatever happens recessionary wise, what's going to happen to the price of Bitcoin? How is Bitcoin going to behave in this environment specifically? Since if you look at Bitcoin's historical performance, as it gets closer to the halving, it tends to go up, right? So is it going to change Bitcoin's historical behavior? Do you think it will continue to be treated by the market as a risk on asset? Is the halving going to play a role in this? What's your take on that, Joe? And then we'll pass it on to Dr. Ross.
So I think that Bitcoin can hang in there and do reasonably well for the remainder of the year before unemployment begins to rapidly rise. And I don't honestly think that unemployment is on the verge of soaring higher in the next couple months. But I think Bitcoin is still going to be caught up in this environment with risk assets generally. And I think that as long as you have a relatively stable employment market, you don't have many forced sellers. And once forced sellers enter the market with respect to the equity market, I think there's a lot of funds that are just going to sell everything, right? Because they have to cover positions and they will sell Bitcoin. I don't necessarily think it needs to go down and make new lows per se. I think it can sort of trend in the same range, but I'm optimistic about next year, particularly the faster we get into a recession, because ultimately I think you need some green light from the Fed, even if they're not going to come with, and I agree with Jeff on the comment about, more stimulus and liquidity being provided to the system. Ultimately, what you want is you want them to be relatively stable. Okay, you want them to have the ability to bring down inflation to a level where they're going to just hold. Okay, and in that environment, if there is a recession, hopefully it's a moderate one. And by the time you get to the other side of it, Bitcoin kind of already bottomed. It doesn't necessarily have to make a new bottom, but it can effectively range in this, build a nice base, range for the next cycle, range until we get out of the recessionary forces that are on the horizon and head higher. Okay. I always tell folks, I don't trade Bitcoin. I don't think it's wise to trade it. I think it's makes a lot more sense to just slowly dollar cost average into a position. But I'm not so naive to think that in a recessionary environment where liquidity is being drained from the system by the billions of dollars on a weekly basis, and money's getting tighter and credit's getting more expensive and businesses are going to have to lay off employees, that Bitcoin's going to go into this raging bull market where we're going to be at $200,000 or $300,000. Now, does Bitcoin have to do terrible in advance of the halving and go to 10K or these ridiculous things that people throw out? I don't happen to think that's necessarily the bull case or bear case or whatever case you want to make it. I just think that, Bitcoin has already struggled a lot last year. It was sort of on this rolling recession. It was sort of the front end of it. It experienced a brutal 2022. And right now I view this entire year as sort of base building to take us higher into the years ahead.
Okay. And what do you think about that, Dr. Ross? Do you think Bitcoin's hit bottom?
Yeah, I do. Although, I don't like to make those kind of calls because could it go lower? Sure. If the floor drops out under risk assets and everybody is panicking, and they think the Fed is making terrible mistakes, things like that, could it go down lower? Could it break new lows? For sure. So I don't like to say that just because it hit that 15.6 or whatever it hit, that it can't go lower. Probabilistically, I don't think it gets back to those levels again, for sure. Piggybacking onto what Joe said, I think liquidity is really important, right? I often talk about Bitcoin as being the great absorber of liquidity, and you have to take both sides of that. So if we're okay with it being the great absorber of liquidity during periods of liquidity expansion, right, what we've seen in the past is that Bitcoin does just exceedingly well. You also have to take the flip side of that and be okay with it if liquidity is contracting. Lots of people are talking about liquidity now. I'm certainly not the first one, but I beller about that all the time on Twitter. And I've seen it go from basically nobody talking about it to now you see it all the time on Twitter, and even on like the main news stations, CNBC, Bloomberg, and such. They're talking about that. If we're going to be honest with ourselves, so net liquidity bottomed in the fourth quarter of 2022. That was very exciting. Bitcoin sniffed that out immediately and obviously had just a fantastic performance. But what I haven't seen anybody talk about since then, including one of the guys who's famous for talking about worldwide liquidity, cross-border capital, he goes by on Twitter. His name is Michael Howell. Brilliant man. He's fantastic. He puts out some of the best research on it. But what he hasn't shown, and I think he should show and be a little more clear on, is that worldwide liquidity basically peaked in February and it's since been coming down and coming down pretty substantially. And we've been seeing in the US here, net liquidity peaked in mid-March and has since been coming down pretty dramatically as well. So it would be, to me, it would be nonsensical to think that risk assets, and especially Bitcoin being the great absorber of liquidity, that it would perform well, at least in the near term, while liquidity is contracting. So that's something to consider when you have liquidity contracting on top of an economy that's slowing, on top of a Fed that's tightening, on top of having this the debate happening with the debt ceiling, coming to a head by June 1st. Those are many strikes going against risk assets, at least in the short term. So very much not bullish in the near term. And how low will Bitcoin go? I don't know, but I do think, probabilistically speaking, that it goes lower in the short term. And if things don't improve from kind of a macro standpoint, it could continue to go lower, kind of in the medium term as well. Now, that's my whole caveat. All of that to say, I think that the longer term bull market has started, and I do think that we're at about month 5 or 6 of the new approximately 35-month bull market. Year one of the bull markets generally are kind of the least impressive of the 3 years, as we know, right? Year 2 is a little better, and then year 3 generally is amazing, and that's when you see that parabolic blow off top. I still think it's based on past cycles and also based on business cycles and liquidity cycles. All of these are kind of lining up to happen again, where I think 2023 is an okay year for Bitcoin. It's already been pretty impressive. It's far outperforming all other asset classes. I think that 2024 bodes even a little bit better, and I think 2025 should be a pretty fantastic year based on business cycles, based on liquidity. Obviously, I'm just looking into a crystal ball, totally guessing, right? I have no idea what's really going to happen in 2025. But I'm very optimistic that we're at the early stages of the next bull market.
Yeah, and go ahead, Joe.
Sorry, I was just going to add. So when you're talking about liquidity and everything, I agree with everything Jeff said there. But I want to point out just one distinction from how to look at this. Okay, all liquidity is not created equal, and that's really important. What I mean by that is, like, for example, people look at the Fed balance sheet and they say, "Oh, Fed added a ton of liquidity to its balance sheet in recent weeks because of the Silicon Valley Bank and the blow up in the banking system." Well, 3 weeks later, the Fed has taken out 50% of that liquidity through various programs, through expirations, through paybacks of loans. The spike you saw, it's almost half gone in 3 weeks. And if it stays on this current pace, okay, you're going to have it all withdrawn in addition to the QT that continues by this time next month. So the Fed's going to make a lower low next month on its balance sheet, combined with the fact that the Treasury General Account, which, as you know, is part of the Fed's balance sheet, that is being drawn down on a weekly basis because Yellen can't issue new debt into the system because of the debt ceiling, right? So all of these things, just in the United States, and we're just talking about U.S. liquidity there, from the TGA and from the banking system, which again is going to be much more guarded in terms of who is lending to right now in this environment, given recessionary forces that are in play. All this is to say that, liquidity, little, fits and spouts of liquidity don't necessarily mean you're in a liquidity cycle, right? Like I said, if you throw a ball down a hill, it's going to bounce as it goes down the hill. It doesn't go straight down. That's not how markets work, and that's not how liquidity works, okay? There's seasonality with respect to the Fed's balance sheet, and there's seasonality with respect to a lot of governments, right? A lot of governments tend to spend, issue new debt at periods during the year, so you can see these little pops in liquidity. It doesn't mean it's a sustained, the punch bowl's back and we're at the beginning of the liquidity cycle, particularly given what their policymakers are trying to do, which is stamp out inflation.